Success is not the absence of failure, it's persistence through failure. Aisha Tyler. That's what we have to do, folks, every day, 10 to 15 minutes. Good, the bad, and the ugly. And these markets have been ugly and weird lately. We talked about at the end of the day on Friday how the market started moving up, pulling back on us. We did not release our text messages like we always do with a weekly vertical crossover just because of the uncertainty at the end of the day there. And of course, what did we see happen? Of course, we saw things whack back in the opposite direction on Monday. The Nasdaq, the S&P 500 up 4.33%, Nasdaq 100 up a whopping 5.20%. Bonds down, not all that much, 0.89%. Gold up. How does that make any sense? That's what gold did. Gold up 0.55%. Now let's jump in first with the S&P 500. We did have a weekly vertical crossover. We can see that as we start this week, we have a long wick on the bottom, short wick on the first day of the latest 5-day candle. Still a down candle is what you are seeing. That again is our Heiken Ashi candlesticks. We're seeing the average pace is still down, price percent oscillator heading down, derivative oscillator heading down. So lots of weight of strong down movement still on those long-term charts, both the lagging indicator, which is the price percent oscillator, and the leading indicator, which is the derivative oscillator. Let's look at the 2-day chart. 2-day candle also wick on the bottom. And again, we see that the body of the candle further down than the prior 2-day. This represents Friday and Monday, the latest 2-day candle. Price percent oscillators lost some of its downward momentum, but still heading down. Derivative oscillator still heading down. We go to that 4-hour chart. This is what we saw at the end of the day on Friday that we spoke about, and that was that slowdown. The first one we had seen looks like somebody was putting the brakes on big time, and of course we saw that reversal. And again, not enough yet with all that downward pressure for there to be a 4-hour crossover going up, but huge up movement, 4.33%. See how things shake out. If this exuberance was profit taking after people panicking, we'll just wait and see how things continue to move along. But keep in mind that 2-day and that weekly chart are still moving down in spite of the strong up moves today. We'll watch and see how that weekly effect continues to play itself out as we move along. Now the Q's up even more than the Nasdaq 100. That is the Nasdaq 100 up even more than the S&P 500. Nasdaq 100 up 5.20%. And of course, again, as we look at the wick on the bottom of the prior week candle, we've not plumbed anywhere near that depth so far this week. In fact, up 5.20%. But as we look at, remember, Heiken Ashi candlesticks show us average pace of price movement. They're calculated differently. You want to know what that's about? I'm going to put that training at the end of today's video. You'll see it linked there at the very end of the video. I encourage you to take that so you understand more about it, why we use it, why it's so important. Price percent oscillator still heading down. Derivative oscillator still gaining downward momentum. 2-day chart, again, deeper down, big candle, red, still moving down, losing some of that momentum on the lagging indicator. Leading indicator still moving down, the derivative oscillator. Go to the 4-hour chart. That again, we saw that slow down in the go down on Friday afternoon and then up in the morning, up in the afternoon. So pay attention. We're sitting right there on the 2-day trend line, pushes through that and continues to move up. Of course, we're going to continue to watch, see what there is to see there, if things are going to flatten out and move back over in the direction of the weekly chart, which is typically what happens. So again, fears of the coronavirus, we'll just sort of see how everything pans out, if this was just profit taking or if all those fears have been resolved and things are going to go up. We'll wait, we'll see. Now, what's interesting is, as much as stocks went up, look at bonds. They were down, but not down much, down 0.89%. And we can see that we've got a new candle that's forming, heading up, price percent oscillator, derivative oscillator heading up. What does that tell you if bonds just aren't crashing? Maybe that people are still quite trepidatious about this exuberance in the market. We'll wait and see. Price percent oscillator on the 2-day chart heading up, same angle. Derivative oscillator also heading up, and we'll continue to keep an eye on that. That's the 2-day chart that's representing Friday and Monday. 4-hour chart up in the morning, burning off some in the afternoon. So we'll pay attention. Price percent oscillator heading down, but still positive. Derivative oscillator still positive, losing some momentum. So pay attention to bonds. They're telling us something. So is gold. Gold up for the day, 0.55%. But look at what we're seeing on the weekly chart. We're seeing a red down candle forming. Now that's interesting. That's our Heikin-Ashi candlestick price. We can see right there near the weekly trend line, derivative oscillator, our leading indicator, losing lots of momentum. That's the derivative oscillator, price percent oscillator heading down also. That's on the weekly chart. When we go to the 2-day, it's heading down also, really booming down, long wick on the bottom, above the weekly trend line, but again, moving down, derivative oscillator, and the price percent oscillator still positive, but lots of loss of energy. We see that 4-hour chart, and it's interesting as we watch, even though gold was up, it had been down for 4 days, strong up in the morning. Well, a pullback in the move down and then sort of resumed in the afternoon as far as Heikin-Ashi candlesticks goes. Derivative oscillator lost a little bit of downward momentum at the end of the day, gained some at the beginning. Price percent oscillator still heading down. So keep your eye on gold. Is gold going to bounce off that weekly trend line? Don't know. Did manage to push right through that 50-period moving average line. So let's just keep watching, seeing what there is to see, what these charts are showing us. We'll pay attention and continue to watch and see how gold plays itself out. So look at the difference between what you're seeing with bonds and gold versus stocks. And we're having some weird signals here. But again, you would expect that with the crazy day stocks had. That's where we are, folks, waiting for things to shake out, see how long this Monday effect is going to continue. And is the stock market not exciting? Yes, it is. What do you learn about volatility? It can go both ways. I'm going to be doing a new training for you on adjusting your trade X factor to help you deal with volatility. And we'll talk more about that as we go through the week. Great training for you today. The training itself is on, let me call it, the trend is the key. The trend is the key. I want you to have that. If you're not a subscriber, you need to go to chartingwealth.com, sign up for free. Then you'll get our daily trainings as they come out. Did a couple of new ones this last week. We're going to relaunch the options 3-part series training also for all the new folks that haven't taken it before. We should do that later in the week. So be sure to sign up at chartingwealth.com for free. Our list is never spammed. God bless. All the best from the whole team at Charting Wealth World Headquarters.